Welcome back to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm really pleased to have with me once again Amir Adnani. He's the CEO of Uranium Energy Corporation. Uranium Energy trades on the New York Stock Exchange under the symbol UEC. There's approximately 90 million shares outstanding, and the stock closed this past Friday at a price of $1.75. Welcome, Amir, to Turning Hard Times into Good Times.
Thanks for having me back, Jay.
Very good to have you. You're always, no grass grows under your feet, as they say. You're always on the move. Lots of good things happening at Uranium Energy. And how many pounds of uranium are you expecting to produce this year, Amir?
Well, Jay, over the last 6-7 months, we've seen further delays with the reactor restart situation in Japan, which has continued to really weigh on the spot uranium prices. And so spot uranium prices, as you're aware, are now in the basically a range of about $28 to $29 per pound, which is quite a low price. It's low in the sense that it's below the industry average cost of production. So you're going to see more mining operations shut down. And we've seen a number of these types of news over the last little while. From the bigger operations that are putting projects on care and maintenance. Also, the price is well below what a number of analysts have reported as being the projected incentive price of around $80 per pound, which is the incentive price to see new mines get developed, some of the larger scale mines. So basically, what we've been cognizant of is that in this kind of environment, it's good to have a more conservative corporate posture. We have gone and sort of started a number of initiatives in terms of making sure that we remain with a strong balance sheet and have financial flexibility. And so what we've really done is taken advantage of our unhedged position. The fact that we are not hedged with any fixed price contracts is an advantage because we can afford to basically slow operations down, even though we're growing our asset base through some of the acquisitions that we've announced recently. The property-based, the asset base is in fact growing, which is for our future growth. And when improvements in uranium prices inevitably come, we'll have the right asset base for that. But for the time being, we've made sure that we've cut a lot of our cost structures, maintain a very low cost base for operations, maintain a strong balance sheet, defer any capital expenditures into the future for when uranium prices recover, and even if we have some interest in some of our non-core assets, you've got to remember we have a very deep project portfolio, not just in Texas, but in Arizona, Colorado, and in South America and Paraguay. We feel that even if we divest of a non-core asset and raise additional cash, this could be a good move at a time like this when prices are down. So these are all the various things that we're doing, Jay, to make sure that the company is just very well positioned to work through this downturn period in uranium prices.
Well, I want to get to the uranium price and a little, some of the factors that work in and play into that. You mentioned the Japanese situation, but before we get to that, you mentioned $80, or I think you said $80 is what the analysts are suggesting is necessary to bring on new mining projects. Probably we're talking about hard rock uranium projects, right?
Correct.
And so I think our listeners need to realize that you are in the process of your production comes from low cap cost, environmentally friendly in situ recovery process, right? And that's a lot lower cost. The operating costs are a lot lower than for hard rock mining, both capital and operating cost, right?
So in situ recovery or ISR mining that we're focused on is definitely on the lower end of the cost curve and in the lowest quartile of cost for developing uranium mines and even the operating costs to produce uranium. This is what our method of mining in South Texas, where we have our production hub and spoke strategy, is currently employing.
But you are continuing to produce even with these lower prices, and what do you expect your cash costs are now, Amir?
Well, Jay, based on what we had reported, our last reported sales were for the period ending October 31st of last year, 2013. And that was the last quarter we actually completed or made sales in the spot market, because with the drop in the spot uranium price, we've really held back on basically making sales, building an inventory right now.
Okay.
We've reduced the pace of operations so that we can reduce costs, but we're still producing to the extent that we can cover some of our operating costs and keep our core personnel. But as of the numbers we reported, I mean, the cumulative numbers, the average cash cost for us since start of production through to end of October of last year came in at around $22 per pound, which is excluding royalties. We pay typically 10% royalty to our mineral owners based on the uranium sale price that we experience only at the time of sale. Beyond that, there are no other mineral or, let's say, corporate taxes or royalties to the state of Texas. So your real true tax or royalty is what we pay to the mineral owner. So you can see even with the cash cost excluding royalties of $22 per pound, which was based on our cost of goods sold, that's the average realized cash cost since inception of production in early 2011 through to the end of last year. That's a very competitive cash cost number to be looking at, to be realizing, especially for a startup operation, a project that's just up and running. And I really think that shows the proof of concept that Uranium Energy has, the proof of concept in having shown that we are truly an operator. We can operate with the best of them, and we can definitely deliver competitive results with the production that we had. But we're being sensible about the current environment and really looking at the fact that it's better to preserve the resources that we have available to be produced to realize that production when uranium prices do recover. And we do, in fact, expect the recovery to take place in 2014, hopefully on the back of these reactor restarts in Japan. Right now, a number of individuals, analysts, market observers that we follow or listen to, a lot of the Japanese trading houses, they're still signaling that there could be possibility for 2 to 5 reactor restarts in the balance of this year. And that could be the much-needed catalyst that the sector needs as a positive boost, which could also really help with the price as well.
Well, I mean, if you're getting back to the economics of your current sort of low level of production that you've just explained the reasons for, that you'd be looking at still at a positive operating cash flow, direct operating cash flow. Maybe not sufficient to cover all your overhead, but certainly the direct operating costs would be less than the prices of $28 to $29. So you're still making a positive margin on your operation. Is that right, Amir?
Yeah, right. Based on the cash costs, you mean?
Sure. Yes. Okay. Well, so there's the Japanese situation. I thought that the uranium that was supplying the world to a great extent had come from the old, the weapons from the Soviet Union that were taken apart, and the uranium was sold out into the markets. Is that program still in place, or is that about over with?
That program is over with now. It ended at the end basically at the end of 2013. That program expired, and it was a significant chunk of supply into the market in terms of secondary supply. But we're just not seeing the effect of it in terms of supply pressures because of the Japanese reactors that are offline.
Okay. All right. So, I mean, it's still up in the air in terms of whether the Japanese reactors will be turned back on or not. I mean, Japan has to have energy from some source, right? That's the issue. And so it's very expensive, the importing the hydrocarbons that they're importing now.
There's major challenges over there. I mean, from an energy point of view,
sure,
nuclear power was providing a third of electricity in Japan. Now that's all been replaced with fossil fuels, which are far more expensive. And already there are reports and articles talking about Japan's carbon footprint also growing, which is a concern from a climate change or just from a standpoint of air quality point of view, which is a huge issue in China. Obviously, it's front page news over there. Air quality issue is one of the big reasons why they're very focused on developing a major nuclear program in China. But in Japan, there have been just consecutive quarters of the rising trade deficit, rising energy prices, and it doesn't seem to be a very sustainable picture to rely on these expensive fossil fuel imports to replace nuclear power. But it's definitely taking to some extent longer than a lot of people expected, Jay, to see nuclear power come back online in Japan. So I think the lesson learned for everyone here, and what we've seen the Japanese government reiterate as well, is that nuclear has to be in the energy mix for Japan moving forward.
Yeah.
But the velocity at which these reactor restarts are happening is probably slower than what we would have expected looking back a couple of years ago or even a year ago. But we're starting to finally reach some important critical milestones with regulatory approvals or local government approvals, applications that are now very advanced through the review process for restart. That's giving the market confidence that maybe like I said, we'll see some positive news on this topic in the balance of this year.
What price of uranium do you think you need, Amir, to start ramping up to full capacity? What would you be looking for to really get moving forward more rapidly again?
There's not a magic number in mind or that has been determined by the company, Jay. I mean, I think really want to first fundamentally see the price start to stage some sustainable rallies or recoveries over a couple of quarters, start to see some fundamental improvements on the demand side with the Japanese reactor restarts, and really see how, as these things unfold, where the right balancing act is in terms of the right expectations on price, but also looking at our business and seeing at what becomes sort of the happy medium to make decisions about more aggressive production growth plans.
You have recently made an acquisition. Talk to us a little bit about that.
The acquisition is of a project called the Longhorn Project, Longhorn ISR Project, and this is part of our South Texas hub and spoke strategy. The project is just over 40 miles south of our Hobson processing plant, which is the hub in our hub and spoke. And Longhorn is a project that is a classic example of how Uranium Energy Corp can utilize the very large amounts of historic data that we have for previous work that has been done in South Texas for uranium exploration and mining. We have decades of work at our disposal in terms of drilling logs, engineering reports, maps that we can utilize to identify targets or projects that were previously explored. Longhorn Project is situated in an area in Live Oak County where this has been a big uranium-producing county in South Texas, Jay. 30 million pounds have historically been produced in Live Oak County. 13 million pounds using the ISR method just within the immediate vicinity of our project by companies like U.S. Steel. And just on the areas that we've leased now on the Longhorn Project that we're calling, there are about 500 historic drill holes at our disposal, and we have a very good understanding of how to use this historic information to fast-track the project. One of the key permits for ISR mining is what is called an aquifer exemption, which can take a great deal of money and time to get, and this is what we have at our Palangana project and our Goliath project. And this project already has that. Due to the historic work that was done here, that permit was already granted, the aquifer exemption. And so it's a very nice package in the sense that you've got the advantage with the permit in hand, you've got the 500 holes that gives us a very good understanding of where the resources are and how, gives you the ability to fast track moving this project up the development curve and having it become plugged into our hub and spoke model. And again, as we look at the anticipation of higher uranium prices, you can see a very scalable platform that we have in place in South Texas now. You've got our Palangana project, which is already built and up and running. You have our Goliath project, which is fully permitted, and we've already ordered all the long lead items for the project and have received all the long lead items. We've submitted for production applications at our third project, Burke Hollow, and now this new project, Longhorn, not to mention two other projects 5 and 6, Salvo and Nichols. So very scalable platform, and we've, I think, demonstrated that we're executing in South Texas. We're moving these projects forward, and they're now at various stages of exploration, development, pre-production, and production. Jay, we're doing all of this while uranium prices are, at a 9-year low. So you can see the company is clearly not sitting around just hoping things improve. We're making progress, and the intrinsic value of Uranium Energy Corp today is greater as a result of the fact that there are more assets. They're more advanced from a permitting point of view in Texas and outside of Texas.
Well, in this environment, you don't get much joy from the markets, but that doesn't stop you from building the company so that when the market turns around, people that own the stock at these levels or that enter the stock at $1.75 or somewhere in that range should do very, very well. How many pounds of uranium would you have in reserves or resource categories now?
Our 43-101 resources in various categories that I'll refer to your listeners to look at our website for the exact breakdown of those are approximately 16 million pounds in various categories. And again, it's all broken down on our website for the exact details. And then there are additional resources in Arizona, the largest one being our Anderson project with 29 million pounds. Again, for the details, please refer to the website. In Paraguay, our UT project is 11 million pounds, 43-101. The Slick Rock project in Colorado, we recently issued a preliminary economic assessment showing 11 million pounds of uranium with a very strong vanadium byproduct, and also demonstrating some good economics on the project as well, where you can see these are not just exploration projects we hold outside of Texas. These are very advanced projects, and at higher uranium prices, the company really has multiple sort of fronts to develop and look at a very good development pipeline.
Indeed. Well, it's at times like these that really smart investors, the Rick Rules of this world, the Doug Caseys, those guys are licking their chops, looking at the potential, studying companies that really have the management, and you have a great management team. Amir, you always attract good talent. I like to say because I think you know how to delegate and how to let people free to use their skills, and you've done a remarkable job with this company as well as Brazil Resources, and is just really want to let our listeners know that I have a very high regard for what you've done. Anything else you'd like to add before we conclude our discussion today on uranium energy?
No, I think it's been great to have the opportunity over the years to speak with you and update your subscribers on the ongoing progress with both uranium energy and the sector. There's no doubt that this has been a challenging time for the uranium and nuclear power industries, the 3 years post the Fukushima accident. But again, when you look at the fact that there are 70 reactors under construction right now, 90 new reactors are expected to come online on top of the 400 and so that we currently have already in the world connected to the grid. Over the next 8 years, there's expected to be 90 more added on top of that. There's real growth taking place in nuclear power. I think that's something that needs to be recognized. That yes, it's these are tough times. Uranium prices are down and low, but the growth in nuclear power worldwide is evident, moving ahead, and it's really not ifs and buts. It's really happening. And so there's really reason to believe that with some fundamental improvements in Japan with the reactor restart situation, we can see the macro picture improve and prices to also recover from where they are. And Jay, just companies like UEC are just not that many in the world. In terms of companies that have a licensed facility, other licensed mines and operations, a technical team that has demonstrated the ability to deliver and operate and produce a diversified asset base in a number of different jurisdictions. This is really, I think what makes UEC stand out, I think is what's allowed us to attract individuals like former U.S. Energy Secretary Spencer Abraham, investors like Rick Rule, Li Ka-shing, the richest man in Asia, who, you look at these names, these are really, in my opinion, strong names and individuals for UEC as a small cap company to show it's been able to attract. And there just aren't too many uranium producers in the world.
No.
And there just aren't too many unhedged uranium producers in the world. The fact that our position is 100% unhedged is just unparalleled. Every other uranium producer has fixed price contracts in place. And I think if you believe in the upside potential of the uranium industry and nuclear power, UEC is best positioned to take advantage of that. And for the time being, we've taken all the necessary actions to make sure we can not only survive during this downturn, but also still continue to advance our business during this downturn.
Yeah, well, indeed, you certainly are doing that, Amir. I want to thank you very much for coming on the show and sharing your thoughts about your company and giving us an update. It's greatly appreciated.
Thank you very much, Jay.
Look forward to talking to you again sometime soon.